Hello and welcome. You tune into Market Fatafat. I'm Ankita Saxena, and this is the show where we get you all the buzzes in the trading session, either on the back of news flow or on the back of technicals. And of course, we're in the thick of earnings season, so a lot of counters and focus on the back of earnings also. And one such management is Lupin. Lupin that has reported a good set of numbers. In fact, it has beaten the street estimation on revenue front, on EBITDA and the PAT front as well. And now we're joined by the management to weigh in on the numbers. Vinita Gupta is the CEO, Naresh D. Gupta, MD, and Ramesh Swaminathan, who's the ED, CFO of Lupin, joining us. Hi, good afternoon to all of you, and thank you so much for joining us. My first question to you is, Mr. Ramesh Swaminathan, that 16 straight quarters of growth now. What is really driving this kind of growth?
It's come on the back of, in fact, secular growth across all our geographies. We've done very well in America, continue to do very well in America, done very well in India for sure. And there has been secular growth across emerging markets, the other advanced markets, and in API as well. So whilst there has been some decline in terms of mirabegron, tolvaptan and other products have continued to do well. So clearly that's the reason why, the results are what they are.
And Mr. Swaminathan, at the end of the last quarter, you had guided for high single-digit revenue growth with 25% EBITDA margin. Now, does this remain intact?
Yeah, whilst we've done extremely well in the first quarter, we are also conscious of the fact that there will be competition coming in for products like mirabegron and tolvaptan, and you might see some slight decline when it comes to America. And clearly, we are conscious of the geopolitical tensions and the cost of, in fact, the war across our cost lines. There has been an increase in terms of freight costs, both in ocean freighting as well as in air freighting. And there are other costs across raw materials, API, and the like. That might actually impact us. And so we would still stand by the 25%, in the vicinity of 25% is what we think it would be for the full year.
Right. Coming to you, Vinita, the US sales are up 43% on a year-on-year basis. And you had, at the end of the last quarter, spoken about maintaining a $1 billion plus US business despite the upcoming competition. What really drove the growth in quarter one of FY27? And what is the trajectory for the coming quarters for the US business?
Yeah, so the growth is more like 33% plus. And with the US being at a higher pace for the quarter. And it's been definitely a much better Q1 versus what we had expected. But we're also starting to see the impact of competition on key products like tolvaptan as well as mirabegron. And based on, the Q1 performance, we expect to be between $1.1 to $1.2 billion for the year. And, with a continued generic expansion, penetration of these key products, tolvaptan as well as mirabegron, as well as new product launches. Like we expect pegfilgrastim, our first biosimilar, to contribute nicely in the second half of the year, as well as the other products that we have in our new product launch calendar.
Right now, Vinita, focusing on the proposed tariffs on US generics, what sort of an impact do you think that will have? And if you've already assessed and factored in that impact already?
Yeah, I think it's too early to really conclude anything on the tariffs front for the U.S. We already went through an extensive kind of analysis when we went through the 232 investigation response to the administration. And I believe that the statement that we've heard in the last couple of weeks, as it translates into policy, we will definitely see the impact of key considerations like drug product shortages in the U.S., which have been at an all-time high, and no one in the administration wants to see an exacerbation on that front. Plus, we as an industry will be working with the administration to see what can we do in terms of measures to really reform measures to increase the stability and durability of the generic business overall, generic industry overall. And if we can get incentives as well as some commitments from the administration, all of us as an industry will be looking at how we can leverage our manufacturing footprint in the U.S. I mean, the industry has a very strong footprint in the U.S. and Lupin in particular has a very strong footprint in New Jersey as well as Florida. And we'll be leveraging that footprint to see what more we can do in the U.S. To meet both the administration's goals as well as ensure that the generic market and business is sustainable.
Right, Nilesh, but tell us, what about the India business with 14% year-on-year growth in Q1? How will the next few quarters look like? Can you give us some color on the guidance?
So the Indian market is actually growing very strong. So you would have seen people have raised their estimates for the Indian market growth itself to now double digit, which was always in the single digits. 14.8% we did in the first quarter, and we would basically expect to continue this growth. We are 30% ahead of the market. That's our consistent aspiration as well. So, stay at that 30% ahead. And it's driven by our big therapy areas. So cardiac diabetes together is 60% of our business. In cardiac, we grew 20%, 20% ahead of the market. Diabetes, we grew 31%, 60% ahead of the market. So it's not just value growth, it's good volume growth as well. Recipe's been slow, but again, we are 35% ahead of the market. This is the performance that we would expect to continue in the quarters to come. We launched a few products, 8 so far, but we launched 20 in this year. So we should expect to accelerate on this growth. I mean, the last couple of years have been challenging from some of the expiries and the like, but now I think we see a period of consistent growth.
Right, so Nilesh, you'd also spoken about semaglutide. Sema-Next is already ranking second or third amongst branded generics within a month of launch in India. So how has that momentum continued this quarter?
So our rank remains the same as the second or third amongst the generics. Our aspiration is to be the largest generic semaglutide. We have 2 brands that we sell under, and right now we sell only the injections. We don't sell the vials, we don't sell the oral products. So obviously there's future launches that we would be doing as well. I think the market expectation has tempered for semaglutide altogether. I mean, people were talking about the GLP-1s becoming 9,000, 12,000 crores for the year. It's still going to be the largest launch that the country's ever seen. I think the expectation is more or less 6,000 crores now. But I mean, that still is a very, very large market. And I think it's a great opportunity for large cardiometabolic players like us. And that's what's happening. I think there were 20 launches, but there are really only 4 or 5 launches which are actually of meaningful scale. That's what we expected to happen. And it seems to be playing out. Very excited about this launch. But I mean, this is obviously important, but I think long-term our innovation pipeline is what will define us.
Right. Well, Nilesh, speaking of the semaglutide, the oral semaglutide launch planned later in FY27, what has the progress been so far on that?
Yeah, I think we're still on track for H2. So we would expect to launch in H2.
And Ramesh, now the company, I believe, continues to evaluate acquisitions in specialty pharma and India therapies. Anything on the anvil there?
Clearly, we are driven by acquisition. So, we have done a lot in the past, and clearly we have the wherewithal to do more. our capital allocation policy has set a limit in terms of the overall borrowings that we'll be looking at, and given our EBITDA of close to about 8,000 crores, we could be potentially looking at 16,000 crores, plus of course what we carry on our balance sheet about 3,000 crores. So 19,000-20,000 is our overall gunpowder. So firepower to that extent, and clearly we are looking at possibilities in India and in specialty, but it's going to be acquisition for if it meets our strategy and meets our criteria in terms of financial returns and the like. It's not about actually acquiring anything for the sake of acquisition. So we would be calibrated about that, but at the same time we are clear about the fact that we will be looking at all of these in these paths.
Right, Vinita, so any comments on the new launch pipeline? Now, ranibizumab is on track as expected, and perhaps incremental opportunity that you see for new launches in FY27?
No, so we have a good number of products for fiscal year 27, with pegfilgrastim being one of the major, one of the largest opportunities. In the second half, ranibizumab will be launched in the first quarter of fiscal year 28, just given the lag from the pricing reimbursement filings. And then we have 505B2s coming up this year. Actually, we're planning to launch an injectable 505B2 for dalbavancin. And next year we have apixaban, which is starting to look at like a very interesting opportunity for us, and multiple other first-to-file products in nasal sprays as well as injectables coming in fiscal year 28.
All right, thank you so much for joining us. With that, it's time for a quick breather on the show. Don't go anywhere after the break. We're getting you more buzzes.